And I think we've gone live. It's midday on Wednesday, the 10th of March, and I'm delighted to be here hosting what I hope will be an interesting and informative discussion on e-commerce. Thanks must go to ABSA for sponsoring Daily Maverick's e-commerce webinar week. And of course, to my two guests. I have with me Lungisa Matshoba, the co-founder and chief technology officer of Yoco, which is a payments company that enables cashless payments in both in online and the e-commerce, in the online and the physical worlds. And I have Justin Drennan, who has a long and quite sparkly history in e-commerce. He is the founder originally of Superbalist, I've just discovered. But that's not why he's here. He's the chief executive of a company called Parcel Ninja, which is an e-commerce, warehousing, fulfillment, and distribution company. And I'm going to invite both Justin and Lungisa to just tell you a little bit more about what it is they do, because I think what is clear is that e-commerce is so much more than a platform. So Lungisa, would you like to start, and then Justin just follow in behind him? Welcome, guys.
Thank you very much, Sasha. So yeah, look, I'll kick it off, and I think Yoco effectively we're a payments company here in South Africa, and we service small business owners all around the country. We have, we service about 120,000 small business owners across the whole of South Africa. And I guess our core value proposition is we make it easy for small business owners to accept payments. When Yoco launched in 2015, if you spoke to a small business owner and asked them, what's the process by which I go about accepting a payment? That was a process filled with a lot of red tape. They had to almost ask permission to get into the industry. And I think what we've really tried to do over the past few years is make it so that instead of asking someone, can you accept payments? You just go to our website and you sign up. Last year, during the first lockdown, we started offering online payments for the first time. And I think really it was a product that we've been working on that we just accelerated as a reaction to the fact that a lot of our customers were in a position where, due to the level of restrictions that were applied, they simply could not trade in the traditional sense of their business. And we just decided we needed to accelerate this. So we went from being an in-person payments company selling only card machines to this base of customers to now today, where not only do we offer card machines, but we also allow you to get set up online very, very quickly. And I think once again, it's been the same value proposition from our side there, really focused on making something that was previously really hard, really easy and accessible. But we can go into all of that later. Thank you.
Thanks. Justin?
Thanks, Lungisa. That's amazing. So firstly, thanks very much, Sasha, for affording us the opportunity here. We run a business called Parcel Ninja, which is an outsourced warehouse distribution and logistics business. We basically enable customers who wish to do home deliveries to be able to do this more effectively, both from a cost perspective and from a courier fragmentation perspective. What that means is we really have two key offerings. The first is where customers leave products in our distribution facility. They push us an order, and it's our job to actually deliver the products to people's homes, which is critical. So when you receive a product from an e-commerce store, there's a high likelihood that we've actually done the picking, the packing, routed the order through the correct courier or the optimal courier, sent it out, and done all the sort of heavy lifting behind the scenes. Our second component we have is we have a software as a service component, which allows you in real time to optimize your last mile delivery based on a few criteria, one of which could be cost. So if you're doing a few thousand deliveries to people's homes every month, you run those deliveries through our system, and we'll tell you which courier to actually use and send it through, so that you end up paying less for the same quality deliveries. We then aggregate all of that data together in one place to give you a single view of what's happening across your entire supply chain. And we focus this predominantly on e-commerce, but the need came out of us, as I said, we're initial investors in the Superbalist business. That we saw that businesses were growing, we're seeing this radical growth in e-commerce. And entrepreneurs are quite good at selecting the right products. They're great at merchandising the products, marketing, etc. But when the rubber hits the road from a physical, picking and packing perspective, no one wants to do that. That's the least glamorous component of e-commerce. So we went around the world and we saw what were the challenges globally. This fulfillment was the biggest issue, or one of the biggest issues. And basically, we went out and built a mechanism for optimizing this distribution and and look to solve those problems so that the entrepreneurs or the businesses could focus on what they really want to do, which is sell product. We were fortunate enough earlier this month to actually get acquired by Imperial, which means it opens up to lots of other opportunities. And one of the areas we've been focusing on over the last few months has been distribution to spaza shops, funnily enough. So we do about 1,500 deliveries a day to the informal market, where we collect the cash, manage the distribution, manage the returns, take orders, and manage the entire process in conjunction with Unilever. And we've seen massive growth in that space there. So those are really the areas that we focus on, and looking forward to discussing some of those with you.
Thanks both of you. I think this is a fascinating subject because we being the audience and myself, we know anecdotally that e-commerce has, doubled, tripled, quadrupled in the last year in South Africa, thanks to, as you're saying, COVID being locked down, not wanting to leave our homes. But you are both on the coalface. So, have your companies doubled, tripled, exploded over the last year? Lungisa, you said that a year ago you didn't offer online payment solutions. Now you're offering online payment solutions. Justin, I assume your company, you've been acquired along the way because somebody has seen the value. Maybe we can start with Lungisa. Maybe you can tell us a little bit about the growth that you've seen. Have you had to hire another 20 people? What's happened?
Yeah, so look, we've seen phenomenal growth in the online payment space. It's gone from being a non-existent product to really just like the amount of customers we're taking on board every single month into the online payment spaces is something that's really been, I think if you'd asked us like a year and a half ago, the growth that we saw in the space, we would have definitely underestimated it. Obviously, the pandemic has had a massive impact on this. So I think we're just, seeing what the rest of the market is effectively experiencing. I think the other side of it that's been interesting for us is just seeing the amount of our existing customers who've also adopted online products who weren't even interested in online. So what we're seeing is a mixture where new people are taking on online, existing brick and mortar sellers are going, you know what, I actually need to have a little bit of an online leg. And what we're starting to see is a larger and larger portion of our customer base is a mixture between online and physical, which obviously comes with its own challenges in terms of management overhead, because it's one thing to manage, an online presence. It's another thing now to manage an online presence and a physical store. And going back to what Justin said earlier, now I've got my store here, I've got stuff online, and I need to be figuring out how good they're getting delivered to my customers. The load of running a business has certainly increased in a very short space of time. From our side, we've just tried to make it easy to operate both these things from a payment perspective. But that's certainly been one of the biggest changes we're seeing is, on the one side, just a growth in brand new people to online. On the other side, a growth in like what we're calling like omni-channel or multi-channel sellers who just trying to sell across every single medium, from an online store to WhatsApp to a physical store. It's all happening at the same time as people try and make sure that their businesses can perform at the level they used to perform before the pandemic.
Amazing. Justin?
From our side, we've seen probably 4 times growth this year in the number of items that we've shipped out of our warehouse, which is obviously a function of how successful e-commerce is. And coming back to what Lungisa was saying there, we see a number of businesses going on this omni-channel journey, or this journey of having a traditional bricks and mortar business and then needing to or wanting to sell products online. I think earlier we spoke about before the sort of conference started, we're having a chat about how even though online is a small portion of total revenue, it's the component or the portion that's actually growing, which I think is critical. And I think that in certain categories, online is or can be a big player. So like I said earlier, if you're selling cement, probably not the best place to be selling it online because it's difficult to deliver. But if you're in like books, if you're going to the DVD, the individual selling DVDs, etc., you'd say that if you aren't doing something online, you've got a challenge. So we're seeing a lot of businesses wanting to move into this online space. But one of the key challenges we look to address is that they say, but how do I deliver things? I'm used to delivering things to distribution centers. I'm used to shipping my products to Pick and Pay, Checkers, Macro, Game, and those sort of centers. But now I need to not pick a pallet. I need to pick a single product and send it to someone. That's very difficult. That's very different. And like he was also intimating earlier, he's saying in these omni-channels, multi-channels fragment your business. They fragment your business a lot. And basically, your supply chain becomes fragmented, your communication channels become fragmented, and you need to hire or understand all these new modes of operating in the industry. And we found that's quite difficult for large organizations. So what we've tried to do there is just step into that space and say, guys, don't worry about your distribution to homes. Come to us. We'll sort that part out. You go focus on running your business, please. So we've seen a big shift towards e-commerce. We've seen home deliveries. We've seen grocery deliveries taking off. And as I said earlier, I think that once this sort of thing becomes habitual, it doesn't go back to the way it was to the same degree. So we think like our high tide has raised all ships in this example. Yeah, so everyone's doing better online. It's exceptionally competitive, but I think those that invested a few years ago in some sort of online competency are now reaping the rewards, and the rest that have not done so yet have a lot to catch up, because there's a lot to learn in various aspects. And so we think that obviously online is here to stay. Anecdotally or through myself, I don't actually go into shopping malls anymore. I'm done with that. I mean, I ordered some T-shirts from Superblis the other day, returned them. They came the next day to fetch the ones I didn't want. The experience is getting so much better, and consumers are expecting a lot better service. That's the other thing as well. Like the take-a-lots have changed the way that individuals shop, but also raised the expectations that you must order and you must get it quickly. So I think those are the sort of things that we're seeing as online happening at the moment.
So Justin, I want to go back to something you said a minute ago, which I found intriguing. You said that you are doing 1,500 odd deliveries a day to Spaza shops, and that's in Joburg alone. So I want tell us a bit more about this. I mean, why has it taken Spazas so long to see the value in online ordering? Or is the pressure coming the other side? Is it marketers who've suddenly said, hey, there's a market there that we need to target, and this online is a new and better way to reach them? I mean, it's a new market. Well, it's not a new market. It's a very old and established market, but it's a very valuable market if you can reach it. So tell us about it.
I think it's a confluence of a few factors to start with, and I'll go through some of those. But it's inherently very difficult to distribute to the informal market. Let's start with that. And there's been numerous companies that have attempted this delivery to Spazas with various levels or a modicum of success in those sort of processes, but no one's been able to crack this informal market, if I can call it that. What we've seen is, if I look at a larger trend, is we're seeing brands wanting to move closer to consumers. In other words, they were fine to work through wholesalers, distributors, and other partners. However, what we've seen globally is brands want to launch their own sites and be closer to their consumers. If you have a look what Nike.com has done, I mean, you can now buy your Nike shoes from Nike directly. Previously, if you look at 10 years ago, you'd have to go shop at a more traditional store to go buy your shoes. Now, Nike.com, you buy from them. They ship it, funny enough, from the Netherlands straight to South Africa. They didn't even open a facility here. They've just gone cross geography, which is quite interesting. But the concept is they want to know who the customer is and interact directly with their customer. That's the starting point. And so with that in mind, we feel that brands are looking to move closer to their customers. And in the FMCG space, this is something they've never had access to. So they've always worked through wholesalers or distributors. And now people are waking up to the idea that why don't we move a little bit closer to our customer and see how we can do that? So what we've gone to do with the team at Unilever's gone and got a specific sales force that goes out daily, visits the Spaza shops, takes orders. Those orders are then routed to our facility.
Okay.
We pack, get everything ready, invoice, manage the process, line haul to our multiple facilities every single night, deliver it to the Spaza owners with our partners, manage the cash, manage the return process, bring it all back to our warehouse, and we give that in a single solution for the customers. And we're dealing with a number of brands in that space, which is quite interesting. But we feel that this market has been so underserved, and now the technology is available to actually help service them better. To give you some idea, as a Spaza owner, you can order a product at 4:00 in the afternoon today. You will have it at 9:00 tomorrow morning.
Sure.
So the Spazas are now getting the same sort of level or better level of service than we are used to in the suburban market, which is interesting. And all of that by technology through the COVID process. And it's just been, as I said, these various factors that have come together right now. And you look at the Venn diagram, they all intersect. And we feel now is the time to be able to see that market with our tech that we've done.
So it's changing business models for the Spaza shops, I'm sure. So what's interesting? Sorry, carry on, Justin.
I was going to say, if you take it one step further, effectively the Spaza shops long term are going to have access to almost every single product that because previously they've had limited space. So the key constraint is shelf space. Now what they got through this virtualization is they know that they can get a product. In other words, if an individual goes to the Spaza, requests a product, that sponsor owner can probably get it by tomorrow and service their customers, so they don't need to go into town or other things. So the quality of service that the sponsor owners are now able to give their customers is going to dramatically improve. And that's something that's obviously enabled by tech in this space. So we see a seismic shift in the informal market, and the capabilities that are going to be brought to the informal market, which is quite interesting. And I think Lisa's probably got comments on that as well.
Well, I think what Yoko and Parcel Ninja have in common is making e-commerce accessible to a whole new segment of markets. And Lungisa, you were talking just now, I mean, I know that this is Yoko's focus, but small business, because when we think about e-commerce, yes, Justin, Unilever, but we think about Woolies and we think about Checkers with 60 Minutes and we think about Take-A-Lot. But what I'm learning from you guys is that e-commerce is so much more than that. And the micro sellers, I mean, there's a whole new market of micro sellers out there. So Lungisa, these are not people who were previously selling physically in a store. I mean, they're new, they're brand new, they're people with new products and things to sell. Is that right? Or, I mean, are we enabling a new market entirely here?
Yeah, correct. I mean, this is a market where traditionally it was relying purely on foot traffic. And what we've seen is two different growth paths starting to happen. So one is obviously people launching online stores where they just, they're using either like a Wix or WooCommerce, putting something together, getting their products listed there, then looking for a way to accept payments. And obviously we offer integration and plugins with those platforms. So they can literally sign up for Yoko in 5 minutes, connect that and start accepting payments on that. But then on the other side of it, we're starting to see a rise of sellers who don't have a store, using channels like, Facebook, WhatsApp, and other instant messaging platforms, advertising their telephone numbers literally and having customers talk to them in that way. And then actually using our app and like just sending like effectively like a little invoice from the app that lets someone pay you via card. And this is suddenly a merchant who's doing an online transaction, but they don't even have a store. And this was something that wasn't even an area of existence before, but this is becoming a viable way to do commerce because, you're engaging with people online and remotely. And then what we're also seeing starting to happen a lot is businesses with a physical presence shifting some of their physical customers into the online space. So someone buys from me in my physical store and I'm letting them know, by the way, you can pre-order from me or you can place an order and we'll deliver it online. And this is, reach out to me on WhatsApp or here's the URL for my website, whatever it is. And I think these things are all starting to happen at the same time. And I guess when we sort of looked at what our role needed to be in this space, I think one of our pet peeves as an organization is any segment of the market where when you try and get the service, the first thing you see is a box that says contact us or a box that says apply here. We don't believe that like accepting payments should be something where you need to contact someone. You should be able to just say, cool, sign up, which means I give you my details and I have access immediately. And this was the orientation that we really wanted to have from an online payments perspective. We make our pricing is available. It's online. It's clear. You can go there and see what it's going to cost you. You can make a decision to get the service and you can sign up. And within 5 minutes after, you can take your first credit card transaction. And you would think that's how it always worked. But it's actually quite interesting. In South Africa, this is not how payments work. In South Africa, you find yourself kind of knocking on doors to get access to a very basic service that anywhere else in the world you can get access to. And I think just what's interesting for us is we've obviously done that journey ourselves because we sell our product online. And when we needed to accept payments, we found that it was extremely hard to get access to the ability to accept online payments in South Africa. So for whatever reason that is the case, for a small business owner, that process is too onerous. If you're running a large business, you kind of delegate the work potentially to somebody else to do. And it happens in its own time. As a small business owner, that is time away from your storefront to deal with a sort of overhead of that process. And I think that's really our orientation, is making sure that for that size of customer, this is easy because it really can't be hard. They just won't do it.
So we've got about 260 very engaged people with us this afternoon. So welcome to our audience out there. But we also have quite a lot of questions. And I'm cautious about leaving all the questions for the last 10 minutes because then often there isn't enough time to deal with them and they're very interesting. So if you don't mind, I'm going to weave in a couple of questions from our audience as we're talking. And one of the questions here is, and I'm not sure if this is necessarily true, but you can comment. Most of the growth and innovation seems to be coming from pure play or digitally native organizations. Where does this leave the big traditional retailers for whom e-commerce has been an add-on? And let's start with you, Justin, because I think your story about Unilever perhaps talks to a bit of this point. But what about the other big traditional retailers? Because, I mean, let's face it, it has been an add-on up until about a year ago, but I think that's changing perhaps.
Yeah, it's definitely changing. I mean, we've worked with Massmart for a number of years, and they've always had an e-commerce focus, which is great. And what we saw, which was quite interesting, is that previously these large organizations would want to do everything themselves. So if you look at a Woolworths, a Checkers, a Pick and Pay, a Macro, a Game, they would always want to say, well, let's build out our own capabilities. Let's build out our own fleet of vehicles. Let's manage our delivery process ourselves. With the sort of rapid change that was brought about with COVID, these large organizations, which are traditionally maybe not as nimble or agile as small companies, had to make some difficult calls. And some of them rose to the challenge and did it, and others didn't. And the example would be is that let's take so Checkers, I think, was well ahead of the curve with their 60/60 offering, and they doubled down on that. So I think they got that spot on. Well done for them. That was phenomenal work. I think the other bigger retailers who were trying to get home deliveries, who were dabbling in it, or dipping their toes in the pond, so to speak, didn't really have the capabilities. But what they went and did is they went and partnered with small, agile businesses, which they would never have previously even considered. If you hear that. So suddenly you've got this Bottles app. You've got all these last mile delivery, one drop. We've got quite a pickup, a number of these last mile delivery services, which the large organizations would have never really used. Now go to them and say, guys, we've got a problem. We need some help. We need to be agile. We need to be quick. And so they've outsourced that ability to be agile to third parties to do, which is quite unique and very, very different to what we've ever seen, which I think is great, which I guess talks to the Unilever plus ourselves opportunity. Yes, a huge multinational, biggest FMCG brand in the world, looking to a small organization like Parcel Ninja to help them be agile and distribute to spaza shops. Suddenly we're holding stock for them. We're picking individual products for them. We're collecting cash from them, reconciling. That to get that done within a large organization is inherently quite tricky. There's systems, there's people, and they don't want to do that. They have to go to a third party to do that. And there's some companies, I said, that have done it and have thrived through this process. And some of the others are still waiting. We're still waiting for our home shopping solution, if we can call that. So I think those are the two, the two like areas of that. That's the dichotomy of what we're seeing here, and they're quite polarizing. And that like some have really gone on board and done it, and others haven't done anything. But to go into it a half-hearted or half-assed about the process doesn't let you win. And we think that partnering with small agile businesses are the way to go, because the real question is can the small guys scale faster than the big guys innovate? That's really the dilemma that you have to deal with here. And we've seen that if the big guys can partner with innovative companies, then there's something to be happened. And I guess that's the story of our Unilever story. That's our Imperial story. That's everything we're doing here. That's the distribution of spaza shops. I mean, without us working with lots of other, the spaza shop solution is not just a Parcel Ninja solution. We've got lots of different players in the space, all startups doing it. But when we put it together, we can make it work. I mean, that's cash collection.
Justin, there's a question from Chantal here. She wants to know if you store products from suppliers in your warehouse to fill orders and then deliver to the customer. Is that how you work? I mean, have you got this giant warehouse on the highway somewhere that we all drive past every day?
We used to be on the highway, Parcel Ninja, that's fine, just off Marlborough. But we've moved to a larger facility now. So we've got two models. The one is we'll give you tech to enable yourselves to do it. Or if you really want all the work done, just give us the products and we'll do all the heavy lifting. And there was a question around economies of scale. We've been able to get economies of scale out of this and do it cost effectively because of the agility or our agile nature, plus the sort of disruptive way we're going about doing it. But there's a business there and it works.
Okay. And Dion wants to know if you have any APIs that integrate to any of the online retail platforms.
Yes.
And can you deliver deliveries on, or can you offer deliveries on perishables?
So perishable deliveries are a bit of a challenge. We'd have to have a chat to see, but we've got integrations with almost every e-commerce platform, as well as with our partners. We've got Sage, SAP One, and all sorts of other components as well. So our job is to make it simple. And I gave the example with the thermometers during COVID.
Yes.
It took 2 days for someone to launch a thermometer site, full site built, payment integration with Yoko, deliveries with Parcel Ninja, you can basically roll out your e-commerce site in a matter of hours. But at the same time, we also service large organizations doing thousands of orders a day. So to be able to have that framework to do both, what that.
Okay, and Karabo's asking, and I think this refers back to your conversation on the spaza shops. What do you mean when you say manage the cash? Is that the cash payments from the spaza owners for their product?
Yes, so the spaza owners ordered products through the platform and need to sort of pay us for them. We have a cash collection service where we do the reconciliations and bring that all together. Okay.
And Lungisa, there's lots of questions coming through for you, so don't think you're off the hook here. But the one question from Fiona is, do you operate outside of South Africa? So I guess, are you enabling e-commerce transactions perhaps in sub-Saharan Africa or anywhere else?
So at the moment, we offer e-commerce transactions in South Africa, but that doesn't mean you can only accept South African cards. You can accept a card from anywhere in the world effectively. So it doesn't matter where your customer is. It's just more a case of like your business is actually registered and operating here in South Africa.
Okay. There's thanks, guys, for the questions. Keep them coming, and I will come back to you in a minute. I probably haven't got to all the questions, but I want to ask you guys, we've been talking a lot about traditional retailers. We've been talking about small micro operators. Do you think that this world of e-commerce that we're talking about is one that's becoming more inclusive? Is it providing a market to people who previously didn't have a market? Or is technology still a barrier in the way that perhaps distance or access to formal retail markets has traditionally been? What do you think? Lungisa, do you want to jump in and Justin follow on?
Yeah. So I think, and by the way, Sasha, there was a little bit of a break in my connection. So a couple of your words actually went missing there. Sorry about that. So if I don't nail the spot on it, you might want to just correct me, but I've stuck it together from my own understanding here. Look, I think the main thing from our side that we're seeing is, retail, regardless of what segment players are playing in, online retail has just become hyper relevant really, really quickly. And I think that ultimately means that it's just one of those segments that small business owners are having to adapt to, as well as large business owners. And I think the part of your question that at least for me, it's really just coming down to like everybody has to participate and play in the space to actually have it grow. The second part, I really have missed a ton of your question there.
So it's about inclusivity. Is e-commerce going to be more inclusive? Are we going to be able to bring more people into the market than previously?
Yeah, so it's interesting. I think that story is not yet written. I think in many respects, it can go both ways. And we've seen this play out in markets all around the world. In some markets, e-commerce leads to the growth of hyper organizations that sort of eat up all the landscape around them. In other markets, it's been done in a way where it's actually decentralized the market and allowed for small players to just get in and compete. I think the South African story, we don't know the answer yet because it's so new. And I think a lot of it's going to come down to, one, which players play a role in shaping e-commerce in South Africa. So it could easily go both ways. What we're seeing is that the consumer wants to adopt, but ultimately the platforms and players who start to provide services will ultimately shape that a lot. For our side, what we've seen is that our role as an SME-focused player is to open up the space to allow small businesses to compete in a space that can be really hard for them to compete. So the way we see it is that for us, success on our side of the business is to make sure that when a South African shops online, an equal portion of their shopping goes towards small businesses and large businesses, right? This is going to be really hard to achieve at the end of the day. I think on the other side, a lot of the major corporate players, obviously, they want to play a considerable and significant role in online payments and online payments in online shopping. So I think it's really a story that isn't written. Some of it will also be written by consumer choice. I think a lot of consumers are intentionally trying to buy from small businesses in the online landscape. But at the end of the day, when it comes down to it, online shopping is about convenience. And our role is to make it as convenient to shop from a small business as it is to shop from a big business. And that's a big mountain and battle to climb. But this is where we've got to head to if we want small business to remain competitive. Otherwise, the result at the end of the day will be that consumers will continue to buy from larger businesses, even at a higher scale, because now suddenly you're not walking past small business anymore. You're going online and spending directly at a larger business. But I don't think that story is written yet.
I'll tell you why I'm interested. Well, I mean, I'm obviously interested in the question, but it's also quite pertinent at the moment because the Competition Commission has weighed in on the subject, and they've announced that they're going to conduct a market inquiry. So it's not based on a complaint. It's rather a let's go out on, the cynics would call it a fishing expedition, but others would say that let's go and find out, let's ask the questions. And I assume that's because of the global publicity that we've seen around the dominance of the Amazons of the world and the Googles and the Facebooks, and the questions that they want to ask and try and answer is, do the platforms, perhaps the big online platforms, so in South Africa it might be Takealot, for example, or Superbalist, or perhaps one of the retailers, do they stifle competition? So these inquiries take 18 months to conduct. But yeah, I'd love to hear views from Justin. Do you want to dive in here? I don't know if I'm cutting you off, Lungisa.
No, that's fine. I think that the large organizations have these virtuous cycles which develop, which is you have a large organization, therefore you have more data to build a better product, to get more sales, to make more money, to build a larger organization, to get a better product, to get more customers. And so it's difficult to stop the big players in that regard. However, I think what's more important around that is what Lungisa and the guys are also doing, which is around the democratization of these capabilities at the end of the day. If you look back 5 years ago and said, I wanted to build an e-commerce site, well, you had to go get some bespoke development work done. Now you can just go off the shelf for $10 a month, you've got a site. You go, oh, I need payments. That's quite a tricky story. Well, Lungisa will sort you out in 5 minutes. Now you've got payments done. You go, oh, I need distribution. You go, well, Pastor Ninja will do your distribution. So suddenly you've got all these capabilities that weren't previously available to you, and they become so commoditized to a degree, plus accessible, that you can actually now compete with the larger guys from a functionality perspective. In other words, if you use Lungisa Plus myself, you can set up a site quickly, you can order a product, get it paid for, and deliver the next day, which is what Takealot had to do by spending hundreds of millions of rands, which I think is critical. So we're empowering all these small organizations to actually have world-class, if not better services than you find from the big guys, because as things innovate, they are slower to innovate. And so using lots of small companies and bringing them together or unifying them, I feel is the way to sort of compete in that space. So I think that's the starting point with it. So through this empowerment, democratization, and this is all brought through technology. No one would have thought of managing sponsorships. No one would have thought about giving all the guys nice payments and point of sale systems. But now they're freely available and they're world class. What you can get in South Africa with the Yoko is world class. It's up there with the international standards. And I'm saying is, and so those aren't the barriers anymore. So the platforms and the technology from a distribution and payments perspective are done. And we've got those. The question is, do people embrace them? Or do they try to do it themselves again? And we've seen that when companies embrace using like third parties to help them who are experts with domain knowledge in particular fields, that's when things sort of unlock. And I like to tell the story when we got involved in the Superbalist business at the very beginning, the key problem they had was scaling the business. They couldn't actually ship products quick enough. And we see time after time, people that join us in our warehousing business have the same problem. They say, Justin, we're trying to scale the business, but we're actually holding back our marketing because we can't ship the products out quick enough. And I said to them, well, just move it with us and off we go. And as soon as they allow us to sort of do that, their business skyrockets because of that. They take away these constraints. It's like you need to remove the various constraints in your business to be able to like automate. And all of those sort of hindrances have now largely been commoditized, I feel. I know it doesn't answer the Competition Commission story. But
none of us can answer that.
Yeah, but it's available is what I'm trying to say. Is the tech is available now to give you world-class services.
Okay. I think also what people forget is that the platforms, so the Takealots, for example, also sell third-party products. So they enable, so small businesses can sell their products through those platforms, which, so we need to remember that they also have Takealot is just not one big homogeneous mess. But I'm going to go back to our audience, and I've got a question for you, Lungisa. It's quite a long one, if you don't mind.
Sure.
But it's quite interesting. And if we're talking about big platforms and companies that are becoming dominant, not that I'm saying you guys are, certainly not, but I think the issue of costs is relevant. And this listener says that she's managing different online stores for small businesses. And she's asked this question several times to other payments gateway owners and never really received a direct answer. So as for a lot of other SMEs, 3.5% plus VAT per transaction is a lot of money to pay to a bank or payment gateway. And it has obviously a massive impact on bottom line and makes competitive pricing quite difficult. She's saying that Yoco, as well as other players in the market, claim that they are supporting small businesses with their service, but they're charging quite a lot, more than commercial banks and more than we see internationally. The standard answer, apparently, is that the interchange rate, the bank interchange rate, is driving the price high. Perhaps you can explain how the pricing works. How does the rate all come together? Because I know there's a lot of different people along that payment kind of value chain that are all taking their small slice. So there's a processing cost, and Lungisa, do you want to just explain how it works and why our charges are a bit higher and who's making profits here?
Yeah. Look, I think
and tell us it's not a cartel.
No. Look, I think at the end of the day, when it comes down to card payments, and if we look at like the origins of like the actual card itself, cards were put in place so that, especially credit cards, were put in place to really facilitate, the offering of lending to consumers. Before the existence of Visa and MasterCard, what typically happened if someone is trying to buy from your store online, you would give them terms. I mean, this is pre-online sales, sorry. Physically, you would give them terms that say, cool, I'll come and I'll pay you in 3 parts, or I'll pay you in 6 parts over the next few months. And you would allow that and let them go with the goods, write their name down, because you sort of knew the people who come into your store. The real innovation of the card was they said, you know what, let's take care of all of that. We'll do that, right? We will deal with all of that. We'll take this on, and ultimately we'll give you the money as a store owner immediately. We'll take the risk of what happens there. We'll be learning. And they did that through partnerships with banks, right? And they did a standard plan. They gave the banks these cards, and this really drove the growth of the industry. So you fast forward to today, and ultimately there's 2 things that are in play when you look at the online space. One is risk. So obviously, with every credit card payment that's accepted online, there's a risk component to it. The other side of it is obviously what happens on the financing of that card. These are really the drivers behind a lot of the stuff. The interchange rate that you hear about is what the sort of regulator has regulated goes to each participant in the system. So there's a certain amount that they make sure goes to the person who issued the card. That is effectively what the interchange rate is. And in some part, this does drive a lot of the cost. And then there's a whole bunch of overheads. So every payment company sort of operates in a different fashion. The way we kind of operate is simple. We don't charge any monthly fees. We don't charge you anything to receive your money into your bank account thereafter, and we settle you daily, right? So effectively, what our fee includes is everything around that. And we offer a very simple and transparent, publicly accessible sliding scale, which means our ultimate model is as you grow, the cost of servicing you as a small business goes down. We reflect that cost in giving you a lower fee over time. And we make that very public. So you can go to our website, you can understand how the rates evolve over time. And our whole thing is like really just making sure that the only thing a small business owner pays is that fee. That now is our way of making sure that it's super transparent. There's no unexpected fees that you're going to get. This allows you then to obviously make sure that your pricing allows for these products to work that way. The nice thing about the online space is everybody's accepting payments. So ultimately, everyone has a very similar cost structure as long as you make sure that you don't have any extra fees associated with your payments. And that's really been our orientation as a business is don't charge the business owner anything beyond that. So what that does, it puts the business owner and Yoco in the same boat. And it was actually one of the most fantastic things for us. It was terrible, but also meant that we're extremely aligned. Was that during the lockdown, when small business owners weren't transacting, Yoco wasn't making money from those small business owners. It was as simple as that. And a proper translation for us of the kind of the kind of relationship we want to have with small business owners. We don't want to charge you monthly for anything, because then if you're not trading, we're somehow, as a business earning off that. That doesn't make any sense around that. So I think that's kind of the idea that's really baked in the model. But as I said, like when we talk about interchange, it's really a cost of finance on the side of the credit cards and a cost of risk on the side of the debit cards. And that's all that's really been baked in there.
So Lungisa, are you saying then that there's no real opportunity for those costs to come down?
No. That is not what I'm saying. So I think okay. In general, what happens in the industry is as the market scales, the costs do tend to go down across the board. So I think it's interesting to call out markets like the US, etc. I think there, one, we have lower interchanges, but two, what you also have in place is scale, and scale ultimately does drive costs.
Okay.
I also think there's other opportunities for alternate payment methods other than just credit card.
100%.
I think there's other ways to pay, which I think are going to sort of become more prominent over time, which I think is important. So I think that I think the status quo is shifting from what we see, if I can call it that. And
well, let's talk about these other payment methods. What are we seeing now, and what are we going to see? What's coming in? What's down the line for us?
I think
Justin, carry on with your thought there, and then
I think Lungisa's probably got more insights.
We'll revert to the expert.
Yeah, I think Lungisa's probably better positioned. I mean, anecdotally, we see 80%, we see 75 to 80% of transactions being credit card, and others. And there's like discovery miles to eBucks to real-time EFT. There's other ways to pay, if I can call it that. And people, and in a similar way to in Parcel Ninja, what we do is we say we integrate with multiple couriers. We give you the best price from multiple couriers. We get the scale, and you can tell us how you want it to be delivered. And we've just finished our integration with Uber now, which is going to be interesting. So you say, I want to ship a product from Sandton to Hyde Park. We could say, here are your 3 different courier options. Here's the best price one. Here's the fastest one. Here's a quick delivery. Would you like it delivered on a Saturday at night? So our job is to become experts in courier and give all those delivery options. I would imagine that Lungisa's job from a payments perspective is to give flexibility and multiple payment options to empower the people in the same way. Lungisa, you can comment.
Yeah, look, I think payments is an industry that's ultimately driven by the consumer at the end of the day. And our job as a payments company is to make sure that a small business owner is able to accept whatever's in the consumer's pocket, or in this case, on the other side of their computer. And I think, as Justin rightly says, the biggest thing at the moment, obviously, is card, right? Card is obviously a massive, massive contributor. But as things evolve, we just need to make sure that if a consumer arrives at a website or receives a payment link or anything like that, when they see that and they go, oh, how do I pay? They're not, whatever they wanted to pay with is available. So I think that's literally it. That is literally the job of a payments company, to make sure that sale gets completed, because what the consumer had, the merchant also had. At the end of the day, I think.
Yeah. No, carry on. I'll ask you.
And to be clear, in South Africa today, the predominant thing that's sitting in the consumer's pocket is a card, right? But what we're starting to see is that even though there is a card, there's other options starting to come out that consumers are interested in. And our job is to make sure that the merchant can accept those.
Well, the one technology that I use quite a lot, and I like because it's so easy, is SnapScan. But I don't think SnapScan is any cheaper necessarily for a merchant than a credit card is. Can you comment on that, Lungisa? You may know more than I do.
So the way SnapScan is, you're effectively just loading your card into the SnapScan app, and then when you make a payment, it's really just using the card. So once again, the same financial model is effectively baked in to the solution. They're just providing a way so that you don't have to keep entering the card multiple times.
Yeah. The one thing that we are seeing online is this instant EFT. And it brings me to a question I wanted to ask you guys about anyway, which is consumer safety online and fraud. And I've read a little bit, and I've forgotten the term. Screen scraping is what I'm reading and hearing about relating to instant EFT. I mean, as we all move more and more online, I guess so do the fraudsters. So how do we keep ourselves safe as merchants, as shoppers? How does everybody stay safe? I mean, Justin, you guys are delivering. How do you keep your product safe? So So let's start with the financial aspect with Lungisa and then move to the logistical aspect with Justin.
Cool. So I think the way, when it comes to consumer safety, and there's been a lot of like work in South Africa, in Europe, in other markets around the world to really think about the question of safety from a consumer standpoint. And one of the most important things has been just making sure that when you do a transaction, it's authenticated by multiple factors, multiple things relate to that transaction. So, a typical example of that will be the idea of something which would be like a PIN or a password, something you have, which could be your card, it could be your phone, something you are, like your fingerprint, your eye. These are all, and combining at least two of those factors together to make sure that the person who's supposed to do the transaction is doing it. So in the physical card world, the something you have is obviously your card. You have that in your hand. In the online card world, in the past, used to rely a little bit on that as well. This idea that, you've got your CVV at the back of your card, that's something you have. But at the end of the day, people can just read that off your card. It's probably not good enough. So what's starting to happen now is that additional layers of authentication are being added that rely on your phone. So we're starting to see in online payment space, there's been a lot of work to add the phone as a way of authenticating. This term sort of 3D secure comes up a lot, 3D secure 2.0. And this has really been an attempt to secure card payments further with something that the customer has, which is their phone. So this is really a good step. I think when it comes down to this, it's just as a consumer staying vigilant in terms of who you share those things with. So if you receive an SMS that comes into your telephone number, making sure that under no circumstances are you passing that to somebody else. That is a way for a company to validate that you have your phone, the something you have, which means if you share that PIN with someone, they can take that PIN and basically log into something as you. You may not know what that is. And a lot of the scams rely on this. So people will get a phone call that tells them, hey, can you give me the PIN that was messaged to you? Or the wrong PIN was messaged to you. Can you give it to me? Or I'm from a bank. Can you give me the last PIN you received? These are all ways to crook the consumer out of it. These are the things to avoid to create safety.
And do you think
those are sort of the most critical things?
And do you think consumers should stay away from instant EFT? Or is it about a trusted site with a little lock on it, such as you would see on Amazon or Take-A-Lot or Woolies?
Look, it comes down to trust, right? At the end of the day, and which service provider you're trusting with what information. But I think the way I kind of see it today is it's an interesting thing. Like why does the whole segment of instant EFT even exist in South Africa today? What it comes down to is there was a portion of people who debit cards, as example, didn't all used to work for online payments. So this what drove the rise. We used to have certain things in the online payment industry where you'd have failures, let's say during Black Friday. Once again, this drove that. So I think this industry's growth is actually coming off the back of some of the failings of the card payment industry. Because once again, consumers drive payments. So it's not being driven by merchants going out and telling their customers, you should pay with this. Actually, what's happening is that consumers are struggling with the existing payment types, and some of them are having to choose other payment types. Its share reflects the percentage of consumers that are struggling. So I think those are sort of the two parts. The ultimate solution of having it be screen scraping and stuff, I think at the end of the day, that just comes down to availability of integrations with banks, availability of future technologies. We've seen a lot of shifts in Europe. We've seen the evolution of the space to open it up and allow for players to integrate without using these sort of these mechanisms that aren't generally seen as being as secure. I think long term we'll get to a position in South Africa where, from a technical perspective, we'll definitely see things like screen scraping decline, but that'll come from actual tangible ways of integrating. But at the end of the day, it all comes down to the customer need, and customers need a way to pay, regardless of what bank they bank with, what card they have. That's the job to be solved, and we need to solve it with whatever means we have to allow businesses to accept those payments.
Yeah. Okay. And Justin, I mean, you're delivering into all sorts. I mean, you're delivering around the country. How are you keeping yourself? How are you keeping your products? How are you keeping your drivers safe? How are you finding your way to rural areas? I mean, tell us a little bit about that side of the journey.
There's a lot of problems to solve in what we do, but I mean, Lungisa's got big issues as well. So I think that, but that's our job. That's what we do. So we take that headache away from people. So there's multiple mechanisms that we use to manage our courier partners. We have deep integration and technology that allows us to identify any issues with any deliveries proactively. So we know when there's an issue with a delivery. But in general, in South Africa, it's not nearly as, I'm not going to say as bad as people perceive, but there's a very, very low failure rate actually with couriers. Normal courier deliveries is in the probably 98th percentile plus on all deliveries, which means it's only less than 2% of e-commerce deliveries are problems. And those problems are predominantly address related, or the person not being home, etc. when I call about a problem. But it's not products being stolen. It's not wrong products being delivered. It's not going to the wrong addresses. Don't get me wrong, there are one or two there are some of those. But predominantly, things are actually starting to work in South Africa, which is quite unique. And our job is to make sure that the right products get delivered, are insured if they need to be insured, are tracked correctly, proof of delivery is obtained, billing is done, and all of that process together, which I think is critical. And then on our Spaza delivery component, it's exactly the same thing there as well. We have returns management and tote management to return and cash that we have to bring back and all of those things. But we're addressing that. We're sorting those problems out, and we've got a solution. We wouldn't be delivering 1,500. We wouldn't be doing 1,500 deliveries a day for the last year if it wasn't working, if I could say that.
Are you delivering beyond Joburg to Spaza shops? Are you delivering into the Eastern Cape, for example?
So we're about to branch out at the moment. So we're busy looking at our new facilities that we're looking at. But we've got facilities in a variety of areas in Joburg. So we've got small distribution centers scattered across the informal, the markets that are underserved. And that's how we sort of scale that. And it's delivery to Spazas follows a very different distribution model to home delivery in the urban areas. They're two very different supply chains, very different methodologies, and it's our sort of job to sort that out. What's interesting in the Spaza space, coming back to payments and how big an issue payments is, probably let's just say 15% of products come back from Spazas because the Spaza owner doesn't have cash. So if they placed, we got there with the product, the guy goes, just before you got here, someone else just came and delivered products and I gave him my money. So these markets...
You and Lungisa need to be talking here.
No, exactly. But we're working with solutions around that. It extends further. In other words, how are people paying the Spaza owners? With cash. But coming back to the instant EFT discussion, there's a solution to be had there to take these people that don't have credit cards who want low transaction fees through EFT and pay the Spaza owners. So my view is the EFT solution is to service the low end of the market, the people that are traditionally underserved. And it's my job to make sure that we can actually deliver those products there, which is interesting.
Okay. There's a lot of interest in our audience who are listening and who are part of this conversation in this the fact that you're offering a service into township areas, underserved areas, perhaps even rural areas, because I think it's opening up a market that previously hasn't been tapped, and it's an opportunity. So Francois is asking, do you think higher LSM food and beverage products can penetrate into this market, and that Spazas could perhaps become a distributor for them? And perhaps, I'm not sure what he's referring to, Hennessy whiskey perhaps, or otherwise.
I think Hennessy whiskey does quite well, actually, in the
I suspect it does.
I think that's the biggest market, in fact, funny enough. I remember hearing, I think Sasha, one of the guys, was commenting on that. I'm not sure is the answer. I'm by no means an expert in Spazas, or the informal market. I'm not that guy. I'm a software engineering guy that got into the space that is solving these problems through systems and processes. Yeah. But we have to understand that more. But I'm not sure what the future looks like with those products. But all I know is that we shouldn't take our previous sort of 20 years of servicing the informal market and carry that forward now. I think there's going to be all sorts of new opportunities. And what's interesting, if you look in the Eastern Europe, these Spaza shops or these post offices were used as collection points for products that they couldn't normally have access to. We're going to create far more accessibility for products that people are buying, but just have to drive into cities to go fetch. Now we can help bring those commodities or products closer to the actual consumer, which I think is critical.
Okay. There's a comment from Chris here who's saying thank you to both of you for your participation, but he's talking about the marketing aspect of smaller businesses. And I know this is slightly out of both of your areas, but I'd love to hear your thoughts. where you're saying, smaller online businesses can't outspend the big brands using social media or Facebook or other platforms, which maybe limits their ability to grow and create scale for the bigger guys. So your costs, Chris says, your costs for them will always be cheaper. So hang on. I think he's making a comment rather than asking you a question. This limits the explosion of potential and essentially funnels sales to the bigger operations, limiting online potential because volume comes into play. I'm sure that you guys, just from what you're saying, you're trying to work with the smaller guys and make your services certainly more affordable for them. Lungisa, do you get cheaper and cheaper as someone gets bigger and bigger, which is the reverse? Actually, it supports the bigger guys. Is that what happens?
I think the first point is, look, our entry fees, I think are we've tried to really optimize them down to as cheap as we could go. I think from thereafter, obviously, as the business scales, we do get cheaper. But I think what's also important, I think in many respects, is like realizing that, look, on a cost basis, and we've been there. This is the thing, like on a cost basis as a small business owner, your competitive advantage against a ShopRite Checkers is never going to be price, right? And it's almost just immediately just going, okay, cool, that is not where I'm going to win against ShopRite Checkers. And asking the question is, where are you going to win? And what it comes down to is offering the things that they can't offer at their scale. And the things that tend to suffer at scale is, being able to, that personalized support, the customization, the ability to engage and interact with the person who's owning and running the product, and a little bit of like selection support from a customer perspective. So I think there's a lot of value that small businesses bring. And this is what's actually made the sector competitive. It is not going head to head necessarily from a price perspective. I think obviously if you're a small business and you're in the position where from a pricing basis you can compete, that's fine. But if we look at the rise of some of the new rising small business brands that have started to compete with some of the major brands, they're not purely competing on price. They're competing on product. They're competing on value. They're competing on service. They're competing on on quality. And I think these are the aspects that we tend to associate quite nicely with small business. Small businesses do produce better products. And really, the way I see it is, this is what makes the sector competitive. And I think this is where we really have to focus in on and say, well, what do we do that large businesses can't? And in some cases, you will have a price advantage, and by all means, let's use that and push that in. But if we look at a lot of really successful merchants that we're seeing, they have a unique angle to what they're selling, a unique product angle to how they're looking at the world that makes a massive difference.
So, Lungisa, Gregory's asking a question here, which is, what is the impact of the introduction of Alipay through Vodacom? What impact will that have on the market in general and on Yoco? Can you comment on that? I think Alipay is something that is going to be a force to be reckoned with, perhaps, in time to come.
Honestly, I can't. At the end of the day, I think where we need to see the impact first is how much does it get into consumer pockets. As I said earlier, it's all about that adoption curve. One thing I can tell you is 70% of the adult population in South Africa has cards. So that doesn't mean that there's no room for Alipay. It just means that there's, end of the day, these products have to fight for the consumer. And from a payments perspective, we've got to make sure that we make it easy for the business owner to accept these payment types. So I think that's what it comes down to. But for me today, I honestly can't say. I've had a look at what the consumer value proposition is. And I think we'll just have to see what the adoption from a consumer perspective is. But the consumers make the vote here. And as a business owner, you need to respond to that vote.
Yeah. Justin, do you want to comment on that question as well? Because I think Alipay and Vodacom is going to go into the logistics side as well. And potentially it's quite a big market. Do you want to add anything there? We are in our closing minutes, so you've literally got a very short amount of time if you do want to comment.
I think it comes back to there's always going to be competitors in a market. Let's just start with that. I think it's what is your USP, what is your value proposition, how you differentiate yourself, what do you do, how trustworthy are you, what can you do, can you innovate quickly, and and how successful have these large organizations been in bringing these technologies into the country in the past? In other words, what has the track record been? Have they learned from the mistakes previously and can bring them in this time? This is correct in saying that the consumers will decide ultimately, and it doesn't help you to try shove a technology down their throat when they've already got bank cards.
Yeah, absolutely.
It's really consumer behavior that drives, and all we're trying to do is just enable it. In other words, if people want delivery to pick up boxes, we do it. If they want delivery to home or fast, our job is to enable all of that.
Oh, Justin, we've run out of time, and I have to quickly say thank you to everybody. Thank you for participating. Thank you for being part of this webinar. I hope our audience hasn't been cut off yet, because we have gone out of time. And yeah, thanks for a great conversation, and I hope to chat to you both again in the future.
Thanks,
Take
Sasha.
care.
Thanks so much.